We live in a world where the dollar has been the dominant currency all our lives.
By definition, fiscally, it is impossible for the United States to default because all of their debt is dollar denominated. It's clear that the United States isn't nearly as big a trading partner for South Africa.
Right, hi, I'm Nick Binedell, and welcome back to another conversation in the series Fate, Luck and Choice. I hope you're subscribing and following us. I'm with my great colleague Adrian Saville. Pleasure to be with you again, Adrian.
Good to be with you, Nick. Great to be in conversation.
Let's talk a little bit about currency and finance.
Yeah.
We live in a world where the dollar has been the dominant currency all our lives, and even beyond our lives. How do you see currencies and the global economy and how things are shifting now?
In our previous discussions, we've touched on the topic of power, and one way in which you essentially have been sort of donated power or given power is if you're transacting in dollar, or if you have the ability to print dollar, or if your home economy is dollar based. So you have power by default, and this has been the case really from around the interwar years. End of World War I, UK loses its global stature in financial power, and it then passes the baton to the US dollar. So it's become the case that by default, almost we measure in dollar, we transact in dollar, we store in dollar, and we think of the world this way. And I have to wonder aloud if this isn't an increasingly dangerous lens or default assumption to have, because if we rewind over the last 500 years, it wasn't the dollar. In the 100 years before that, it was British pound. In the 100 years before that, it was French livre. In the 100 years before that, it was a Dutch guilder. So the baton has passed.
The Romans had their coinage, which dominated all trade.
Sure, and the Spanish had their go at it 100 years before before the Dutch. So the baton passes, and there's the first is at least a provocation: is could this be a moment of the baton passing, given all of the shifting parts of the world? And if that is the case, what does it mean for my business?
Right. And I mean, a currency is a symbol of your power as a country, because you can charge a margin, people trust in your currency, and as you were saying, they may invest or bank or trade in your currency.
And you can issue debt in your currency. So, by definition, fiscally, it is impossible for the United States to default because all of their debt is dollar denominated. Of course, they can run up against their own fiscal ceiling, which are self-imposed rules, but then they get to lift the height of the ceiling after a little bit of political negotiation and pointing and foot shuffling. But fiscally, it is impossible for the US to default.
In the last 10 years, the BRICS countries have made a lot of noise about an alternative.
Sure.
Are they beginning, do you think, to get into the hood, or is the Renminbi going to be a serious contender for being a favored currency?
So if you think about the last 50 years or so, where there've been contenders that have presented themselves, and I think of the Japanese yen through the 70s into the 80s, the 90s, the euro is born. The euro gets a chance as a contender, but they've perhaps been pretenders more than real contenders. Almost no one has Japanese yen, meaningful stores
and am I
of
right
value.
to say, whenever there was drama, there was a flight back to the dollar?
Flight back to the dollar. All of the European currencies that have consolidated, what they've really done is they've taken what used to be a Deutsche Mark, French franc, lira, etc., have now all just aggregated into euro. So there hasn't been any transition there. The place that there has been a slow and steady move is increasingly seeing the renminbi coming in as a basis for contracting, not yet a store of value, but it's starting to make its way. And so I think it would be grand to suggest this is about to happen. We are on the cusp, but this is a slow motion progression.
So is the renminbi what the euro is to the West? The US dollar is dominant. In Asia is the renminbi dominant, and the yen, of course. And the other currencies all have to live within that world and the dollar world.
Yes, and yes, however, for that to become a meaningful currency for transactions, store of value, that central banks will use this now as one of their reserves. I think there's a couple of other things that need to happen. The first is the financial system needs to, when I say modernize, what I mean is sort of iterate, so that now payments can happen on those rails, that becomes the way in which we transact. That's one. The second is you need institutional robustness, that we need to have confidence in rule of law, contracts being observed, financial arrangements, institutional arrangements. All of that needs to sit up before we can say, right, that is going to be our default currency.
And you see that gradually emerging.
It's certainly emerging. And whilst it seems this is early to call, let's put that on the table. It's an early call. But if we rewind 20 years, think of what
it was an unlikely call.
Absolutely. So 20 years forward from here, what could that look like? Now, why I'm sort of raising or running a flag up the mast is there's a couple of other things going on in the setting. September 2025 is you've got US bond yields are starting to nudge their way up. 30-year bond yields are heading into 5% territory. Japanese long-dated yields have gone into record territory recently. A couple of the European markets, France, Italy, are showing signs of fatigue and stress.
And what is that signaling?
Well, the bond market, James Carville says in his next life he's not coming back as the Pope, or he's coming back as the bond market because you can intimidate everyone. And
why is it so important?
Because the bond market is signaling a future. And keep in mind,
futures market.
Yeah, what I'm talking about here is 30-year yields. And 30-year yields are telling us something. 30-year yields are saying...
are where the jockeys are saying the horses are going to go.
Yeah, all is not the same. At the same time, you've got commodity markets, and in particular precious metals, which are a valuable signaler. Gold price is sitting at record highs. That is telling us something, because if not the dollar, then what? And gold has been, love it or hate it, a traditional store of value. So you're getting signals from...
as a risk indicator.
Yeah, you're getting signals from the bond market, you're getting signals from the gold market. And then finally, to throw into the mix, from an indebtedness perspective, the developed markets are all hopelessly, knee deep in debt. So, that leaves them from a fiscal perspective fundamentally weakened.
Adrian, what does this dynamic mean for a small island country called South Africa?
Yeah, I mean, that's a great question, Nick. So for South Africa, if you ask this question 30, 40 years ago, it would have been, perhaps even, trivial or academic. Not much to see here, move on. Your default partners, capital providers, funders, is the West. Increasingly, that has shifted. And what you've actually seen, by way of example, to give substance to this, is with all of the tantrums around tariffs, it's clear that the United States isn't nearly as big a trading partner for South Africa as has historically been the case. Give far more attention to the East. Whilst you're giving that more attention to the East, at the same time, it remains the case that your balance sheet is West. So you've got this ambiguity of the balance sheet being West, but the flows being East. and the East is becoming increasingly important. So you need to do what Sakura Honda says when it comes to strategy. Maybe it doesn't have to be A or B. It has to be A and B. And so the art of diplomacy, how do I face East and West at the same time?
We did a fantastic dialogue in another group I'm in with the previous Chilean ambassador to South Africa, who's an economist, and he went back to Chile into cabinet, being a professor. And he talked about agile non-alignment. He says agile non-alignment is a sophisticated form of foreign policy where you play the field and you're prepared to pay the price of playing the field, but you have to be agile. I'm not sure we are agile.
This sounds like bachelorhood.
Fair enough. But, that's what he articulates. And he says South Africa is not showing enough agility.
Okay.
And we get into trouble because of our
because of being too dogmatic. Or...
Well, and because of our new friends.
Yeah.
So there we go. So very interesting. I mean, if you're the CEO of a company, can you give us just a thought on what the implications are for you?
You and I have spoken often about getting off the dance floor onto the balcony, sensing and trying to get, the feel of the place. And it surprises me how little attention is given to these big sort of macroeconomic ideas or shifting sands. And so I would say to the CEO, spend some time just getting out of the here and the now and trying to look at what the world might be 10, 20 years from now.
Are you talking now about currencies or markets or both?
I'm talking about both.
Sure.
Thinking about how you're transacting, who you're transacting, the way in which you're contracting, and where you're going. Yeah.
Let's end off by saying, as we did in that first series we did on Southeast Asia, is, go there. Don't go back to London if you can avoid it, unless you have to go. But go to Jakarta, go to Mumbai, go to China. And certainly in my experience in the last 3 years, it's mind-boggling what you're seeing. Countries with big populations developing their economy much more assertively. It's an extraordinary area. Thanks very much, Adrian.
Thank you, Nick. Go see.